It's the fourth cut in a row and the largest one yet. Today's Bank of Canada's rate change has put the country's key interest rate at 3.75%, a figure not seen since October of 2022. Experts are saying it's a move that marks a milestone in the bank's battle against inflation after several years of bump and grind in the Canadian economy.
In the past few months, inflation has come down significantly from 2.7% in June to 1.6% in September. Recent indicators suggest it'll be around 2% in October. Price pressures are no longer broad-based, and both our measures of core inflation are now below 2.5%. Our surveys also find that businesses and consumer expectations of inflation have shifted down and are nearing normal. All this suggests we are back to low inflation. Today, we lowered the policy rate by 50 basis points. This is our fourth consecutive decrease since June and brings our policy rate to 3.75%.
The Bank of Canada's governor says today's rate change comes as inflation begins to slow down across the country.
Price pressures are no longer broad-based, and both our measures of core inflation are now below 2.5%. Our surveys also find that businesses and consumer expectations of inflation have shifted down and are nearing normal. All this suggests we are back to low inflation.
And now, the BOC has a new focus, to try and keep it that way. Or in Tiff Macklem's own words,
we need to stick the landing.
And while the battle against inflation has been hard fought and hard felt, some are taking the opportunity to plant the victory flag, like Prime Minister Justin Trudeau, who says it's good news, or his Deputy Prime Minister Chrystia Freeland, who says today's cut means, quote, more money in your pocket, including when you renew your mortgage.
So for the majority of Canadians, their mortgage is fixed to some contractual rates, and they're not so worried about what the rate is today, but they're worried about what the rate is going to be when they renew. So think about the people who got mortgages in early 2020 when rates were their very lowest. Now, as rates kind of go down and they come up on their 5-year renewal in 2025, that's when they're most excited to think about, hey, rates are lower, I'm going to be able to lock in another low mortgage rate.
So if you're one of those with a mortgage renewal coming up in 2025, a cut is certainly good news. But the interest rate is only one part of the country's economic equation.
I think the more important question is, what is the terminal rate? What is the rate that the bank is ultimately trying to reach? I think in the medium or long run, it doesn't matter too much if we have 2 25 basis point cuts or 50 basis point cut. What we really want to ask is, what is the rate at which the bank is going to arrive to? And I think that's going to tell us a lot more about how they think the economy is really doing.
And in the Bank of Canada's own words today, the labor market remains soft, shelter costs remain high, and population growth is continuing to expand the labor force, while hiring has remained modest, something that's primarily affecting newcomers and young people overall.
Now, there's always the case where something might happen that's completely unexpected. Think about the pandemic, think about the Russia-Ukraine situation. If something like that happens, then all bets are off.
Take, for example, Canada's trade partnerships with the United States.
And exports should remain strong, supported by robust demand in the United States.
While the bank may be feeling confident with Canada's level of export developments, that can't be said for everyone.
I'm announcing today that upon taking office, I will formally notify Mexico and Canada of my intention to invoke the 6-year renegotiation provisions of the USMCA that I put in.
Currently, there's a resounding feeling across the board that another cut is on the way. But if the last 4 years have taught us anything, well, it's that anything can happen.